Steve O'Brien back with you on the Triangle's Afternoon News and the economy on everyone's mind. I'm so honored to be joined by Pete D'Arruda, president of the International Association of Registered Financial Consultants. He's an investment advisor. You have heard him on the radio and on podcasts, and he is the founding partner of Capital Financial Advisory Group. Coach Pete, thank you so much for joining us today.
How you doing, Steve?
I'm doing just great. Better than some, not as good as others. So, I know this has personally affected my retirement savings, not as much as someone that's got, six figures or even more in their retirement accounts. How is this affecting retirement accounts?
Well, it is affecting in a big way, and many people might not realize it yet because they haven't gotten their 401k statements that come out quarterly. And so it's just a point where the market was overbought, and now it's equaling out a little bit, but it's being helped on the downside because of all the things that we've seen. I mean, with gas prices, the inflation, I mean, they all have effects in a negative way on just regular stocks, bonds, and mutual funds, unfortunately. Even crypto. I mean, crypto market's down by half at least over this in 2022.
So is the thing to do to panic, call your financial advisor and say, oh, I want to get out of this, I want to get out of that, I want to go here or anything? Is that the wise thing to do?
Yeah, you don't want to make impulsive decisions like that. And the secret here, and a lot of folks realize this already and probably have already doing it, but is to have a plan that makes sense. And the plan that makes sense is not to have all your money at risk. And risk is fun when the market's going up. Heck, it's been really fun the last 13 years. But, anyone who's gone to an amusement park when they're little, they close every now and then. You have to leave. And so that's what's happening now. The roller coaster is done for the day as far as on the up. And now we need to make sure we have a core and explore philosophy. We really need to have wealth defenders built into our plan and making sure that we can't lose some money in some of our accounts. And we call it the growth protection income account. Wouldn't it be great to have an account that grew when the market grew? Not all the market gain, but none of the loss when it goes down. So you lock your gain in, and then at any time in the future, you decide when you're going to activate that and get a lifetime income you can never outlive. We call that a core and explore philosophy, and that's a financial fill-up strategy too, getting that check every single year. Even if your account balance went to zero, you would still get that check. And so taking the worry out of living in retirement, very important to everyone listening. We've talked to so many people over the last 30 years that I've been here in the Triangle talking about finances, and the main thing is, when the market's going up, everyone feels bulletproof, and when the market goes down, everyone feels defenseless. And so get that wealth defender in place where you don't worry every single day what's going on with some of your money. Nothing wrong with the market. We embrace the market, but not too much money in the market, and sure not all your eggs in one basket. In other words, picking one stock. There's so many stocks that have been beat up really bad this year. Like Coinbase is one of the ones that handles crypto. They're down 74% this year. And you look at some of the companies we know. What about Ross Stores? Ross Stores is down 23% today. Burlington Stores, Burlington Coat Factory kind of stuff, 17% down today. I mean, you can't manage a retirement plan if you're constantly losing money like this. And I don't really think we've seen the end of it. This might just be the tip of the iceberg, unfortunately.
So was this, I've heard several financial analysts mention that with as high as our stock market got, this was only inevitable. True?
Correct. Yeah. But the problem is, Warren Buffett's 2 rules of investing, and if everyone followed them, they wouldn't lose money. Rule number 1 is don't lose money, and rule number 2 is see number 1. But, the old saying is, and Warren Buffett also said this, I'm really pumping Warren Buffett up today, but he said it's not until the tide goes out that you find out who doesn't have a bathing suit on. And unfortunately, we're seeing that now, but I think the tide is still pretty high. We have a lot further down to go. I mean, look at Dow's gone from 10,000 to 30-some thousand in just a decade. That's outrageous. I mean, if you press the pedal down on your car all the way and you see that little the revolutions going up to 8,000 revolutions per minute, all of a sudden your engine's going to overheat and explode, and that's what's happened, unfortunately. And then you have to pull over to the side of the road, and who knows how long it'll take to get a tow truck, and much less replace that car these days, right? So just be careful. I would just say for folks, this might be a wake-up call to many of you out there to get a review, and maybe not from the same person who's been giving you the same review, because, I mean, maybe the person you thought who was an expert isn't as smart as you thought they were now.
Mark Hamrick from Bankrate.com, who's a very smart guy and a good business analyst, just had an interview this morning with Scott on the morning show. And one of the things he brought up was that a lot of this is coming from the major problems that China is having with their economy. And, of course, this war over in the Ukraine. Are those the main fingers, or is it not important to point fingers right now? What brought this all on?
Well, if you launch $4 or $5 trillion on an economy when you're paying people not to produce things, and those same people that are getting paid are going out and buying things that they're not producing, it's a supply and demand crisis. So no, it's not just over there, it's over here. Congress loves to point the finger everywhere else. They need to point the thumbs right back at themselves. This is we've seen this. I mean, we saw this tidal wave coming. I've been talking about it on my radio show for a couple of years. You can't keep launching money on the market when you don't have enough products to buy. Everyone can't be rich. If everyone's rich, everyone's poor. And Porsche only makes so many cars per year. Not everyone can have one.
You know, I remember a time when getting the Dow over 1,000 was a major, major thing, and now we're so very much above that. As we talked about, it was inevitable. Something had to. I think it's a good analogy. If you keep pushing down on the gas, something's got to give.
You know, I'd had a dream last night. I was doing that to my Jeep. and luckily I woke up right when I was breaking down. So that's the best time to wake up. But we're not going to wake up from this unless we wake ourselves up. And we have our financial wake-up call is to make sure we have the correct plans going forward. You know, what worked yesterday is not going to work tomorrow, unfortunately.
Absolutely. Coach Pete D'Arruda is, you hear him on the air on the Financial Safari Show and also here on WPTF and as well as his podcast. Coach Pete, thank you so much for kind of explaining things, giving folks some things to think about as far as their financial future goes.
Yeah, we've got a little self-study. If anybody wants, they can go to PeteOnDemand.com. All sorts of freebies there, audiobooks, guidebooks, calculators, you name it, just to get a little bit more educated.
There you go. Education is the key. Pete, thank you so much for joining us.
You're welcome, Steve. Take care. Happy weekend.
You too. WPTF News Time 3:28. I mean, it's not rocket science. You can't keep
pretty good.